now like to invite our next set of speakers who are going to be part of a show and tell. This is going to be a demo by our showcase winners. We will have speakers from Snapmint, Agya Account Aggregators, and Setu, who are the tech service partners. And they will be talking about Stay on Track, loan monitoring for the future. May I request the teams to please come up on stage?
My name is Atreya, and I handle the product at Setu, which is a TSP in the AA ecosystem, as well as I'm a part of Agya, which is an in-principle licensed account aggregator in the AA ecosystem. I'm here with Gavin, who leads product at Snapmint. And we're here to show you the future of lending, especially with use cases like loan monitoring, and how you can use account aggregator and insights for personal lending in the short-term credit cycles. So before I jump into what the problem was and what we're trying to specifically solve for, I want to talk about two themes. The first theme is lending. The way lending works is starting to change in India. Firstly, it's moving from discrete payment-to-payment related relationships, where things are done in a reactive and punitive manner, to a more continuous relationship, where it happens at the point of sale. There's a continuous understanding of the customer's behavior, and there are changes to the amount of credit, the rate of interest, and a few other things based on that, right? We are going to talk about Snapmint, which is a zero-interest EMI player, and how this new form factor for lending is enabled through account aggregators and insights. The second theme that I want to speak about is, we like to say this at Setu, that as much as lending is about disbursals and credit and underwriting, it's also about collections and making sure that you're able to get repayments. So without further ado, I'll hand it over to Gavin to talk about the specific challenges that Snapmint wanted to address and how account aggregators and insights modules helped change the face of lending for them, and also show the use case of credit underwriting and monitoring.
Thank you, Atreya. So I'll give you guys a quick introduction of Snapmint. Snapmint is the fastest growing fintech with online EMI at 0% interest rate. We have 12 million app downloads with a 4.5 plus star rating. We have 4 million active transacting customers, and 65% of our customers have a credit score of above 750. We enable 0% EMI options for all our partner merchants. Let's roll. At Snapmint, we empower new-to-bank customers with real-time underwriting on the checkout page of partner merchants. The challenge here is to underwrite expensive purchases like iPhones and mattresses when app, SMS, and surrogate data is not available. Collecting customers' net banking passwords and screen scraping is not only intrusive and expensive, but more importantly, it lowers conversion rates due to trust issues. So let's look at how Snapmint leverages the AA ecosystem to democratize online installments. Over to you, Adria.
Thanks, Gavin. So we thought why wait and explain all the mechanisms? We'll start with showing you what it actually looks like, right? What is this mechanism? How does it work in real life, right? And first, I'll show you a prototype of what we are doing and a planned implementation here. And then we'll get to the specific impact as well as the how of this, right? So without further ado, jumping straight to the demo. I hope this is visible to everyone. So what we have here is a new type of consent itself, or a new type of consent flow. Let me be specific. Within this, Agya, Setu, and Snapmint are enabling what is called a dual consent. Now, there are two separate consents, each with their consent ID. A separate consent request is sent for each, pertaining to different use cases, but it's shown as a single flow to the customer to ease their experience and smoothen the way they get their loans, they are underwritten, as well as the post-dispersal journey until the period of the loan. So what you see here, of course, is the consent details just before login into the account aggregator consent manager, right? So this is the consent flow, which is an extension of that. Consent 1 is specifically pertaining to underwriting. So this is a one-time fetch. And here you can see the the actual purpose description of that loan. It is to verify their income and calculate their loan eligibility, underwrite them, basically. Now, since this is a short-term loan, and assuming the date of the loan, them applying for the loan is today, we are asking for their bank statement for the last 6 months, right, which is the duration here. They're also able to see all the specific details of what data is shared. So what parts of the statements, how often it will be accessed, how long this data will actually be stored or used, as well as approval expiry for the consent itself. Now let's move to the second one, which is where we're bringing in the future a bit, right? The magic of account aggregators is the periodic fetch, or the ability to get data again and again in the future through a singular consent taken at the start. So here, we're taking a periodic consent to monitor the customer's account for the period of the loan. Now, assuming this is a 6-month EMI, we will take a consent for their bank statement data for the next 6 months. But more importantly, within the details of it, we'll be periodically fetching this twice a month, right? We'll also be mentioning the other specifics of the consent. But let's walk through the flow, and then I'll explain to you how exactly we use the periodic consent to give insights and also have early warning systems for lenders. So we're starting with a phone number that's passed by the FIU in the consent request, and we send an OTP to the customer. So this will come from the account aggregator itself. Here I'm logging in, and just before we jump in, this is a completely responsive flow. So if the user is on a mobile, it'll be mobile friendly, and of course here, since I'm doing it on desktop for better visual clarity, it is suited to desktop. So we'll start with selecting with the user, and this is from the perspective of the end user, after which I'll shift to the FIU perspective. Here, a user will be asked to select their bank accounts. So for a lot of open apps, they're not aware of which accounts the customer has and probably wants them to select them. So I'm just going to take 2 banks and say I'm going to select, as an end user, I have an ICICI bank and an Axis Bank account. On the side, they always have, and this is enabled in desktop, you always have the consent details in full visibility for the customer, just so that there's higher transparency. I'll then fetch the accounts using the phone number. So now is the bank discovery phase. And as you can see, we're probably discovering 2 ICICI bank accounts and 1 Axis Bank account. Here, what I'm going to do is I'm going to select these 3 accounts and decide to share all of them for the purpose of this. I go to the Verify Accounts page. And here, what we'll do is there is a process called account linking, where the accounts, be it savings or any other data, FI type or financial information type, these accounts are linked to the account aggregator for that end user's account. We auto-trigger OTPs, of course, and we trigger them one by one to prevent any confusion. I'm going to authenticate the second account with another OTP, and these OTPs come from the bank. Finally, there's one last chance, and we try to kind of use motion and a few UX enhancements to guide the user on what to do and how to do it on the consent details. I'm going to go ahead and approve this. Now, just one last thing. Since this is a dual consent, there's a chance that the customer may not have seen it, which is why we offer them the chance to choose which consents. Now, of course, this is also based on what an FIU or a lender wants, as well as what the customer wants, so we try to balance that out. I'm going to approve both consents just for the sake of this demo. And here's where the magic starts. The customer has now given consent for a consent for underwriting, which is one time, and loan monitoring. Let me quickly show you what it'll look like for an FIU like Snapmint. Now that they've got consent, they can fetch data. We'll start with what is called consent 1 here, which is the underwriting insights that is powered by Setu Insights, right? Through our proprietary models, what we do is we analyze raw data that's from an AA, and we're able to give you a customer credit profile that looks somewhat so. This is a visual representation, of course, but there are other formats in which it's available based on the needs of the lender. Here, what you'll see is things like end-of-day balances, fraud indicators, willingness to pay indicators, so things like check bounces, right? Irregular salary credits, having someone in both the credit and debit side of things. Then we look at the amount of obligation someone has as a percentage of their income. If you heard the last panel discussion, this is quite an important thing from the POV of a lender. Expense summaries, creditors, debitors, top 10 credits, top 5 debits, top 5 credits, as well as income summaries and a breakdown of income. All of this helps a lender assess someone's creditworthiness and underwrite them, essentially. But this is not where it ends, right? There's a period of periodic consent during the tenure of the loan, after which they can see other insights pertaining to the repayment behavior. So what will happen is, once you have a periodic consent, you're able to tap into a user's bank statement for the tenure of the loan, maybe twice a month, as in this case. During that time, you're able to see a bunch of signals that Setu synthesizes, such as the balances in relation to the EMI amount, any drop in cash flows of the user, and other such specific indicators that talk about any increased probability of default, so that they can take remedial measures rather than reactive measures and punitive measures. So this is the power of AA and insights together, and how it can improve the life cycle of lending for lenders and the consumers of lending services as a whole. Jumping back to the presentation. Is it full screen? No. Yeah. So I'm going to hand it back to Gavin now that you've seen the power of it, just to talk about some of the impact on the brand side of things for Snapmint, as well as for Snapmint themselves and their end users.
Thank you, Athra. Well, Snapmint is the only fintech in India to contribute to more than 15% of online sales for its partner merchants. This is because of the seamless customer experience, where customers never leave the brand's website, while the underwriting happens in real time. All this results in a win-win scenario where brands see increased sales, as a result of which they are open to offering better commissions to leverage the power of 0% EMIs, leading to a sustainable model compared to deep discounting. On Snapmint's side, we've seen a 27% increase in revenues, an exponential increase in completion rates for products with higher limits, 0 bank statement frauds, and a steep drop in loan processing costs. With the power of AA, we are further able to improve customer experience by providing better limits, flexibility in EMI payments, and accelerated foreclosures with options for cashback. So, Athreya, why don't you tell them how Setu could help them achieve what Snapmint has done?
Sure. So let me walk into the two different players we're representing today. First is Agya, and then is Setu, right? Agya is an in-principle NBFC account aggregator. We're awaiting our final operational license. But through Agya's consent manager, we're able to take consent on behalf of FIUs from the end users, and then able to fetch data straight from the FIPs, or financial institutions that have that data. This is completely secure and consent-driven. Now, why would you choose to use an account aggregator like Agya? Well, of course, you've heard this a lot today, but I'd just like to reiterate. It's a smoother data sharing process. It deals with a few key problems, such as consent conversion and the convenience to users, the privacy risks associated with other methods of data gathering, as well as the privacy risk for customers themselves, and finally, cost, right? Fraud, especially the statement-level fraud, as was spoken about again in the previous panel, moves to nearly 0 because the data is straight from source. Now, coming to the consumers, which is you and I, for the first time ever, we have consent managers at our fingertips. We know who has our data, when they have it, how they've used it, when they've pulled it, and we're able to also take control over there. Finally, of course, we have access to various different types of FIPs, or different data types, from banks to insurance to securities and even taxation data. Setu seeks to make digital financial services accessible to every Indian. But specific to this to the account aggregator ecosystem, Setu acts as a TSP that helps onboard FIUs such as Snapmint or other lenders and PFM players as well. And through this, we're also able to give our embeddable consent modules, help fetch data via an account aggregator, of course, and our value-added services, which is called Setu Insights, which is around analyzing all these statements and giving insights to FIUs to act upon it and give better services to their customers. So how does this all fit in? Let me walk you through this real quick, right? Firstly, Setu as a TSP via an AA like Agya can help you fetch accounts, like bank accounts, from the AA consent flow. Once you have this data, this is fed into our engines and our proprietary models that help with income verification, income type, things like categorization of expenditure and income, fraud checks, any willingness to pay indicators, and other account verification requirements. Now, we have a completely customizable module, which then chooses, through which you can choose your template, your format, and the preference of specific indicators that you want, and then feed it into a dashboard, or it can be completely through a JSON XML format in a backend. Finally, you feed this into your business rule engines, if you're a lender, for example, or your credit risk teams, to take decisions on loans. But it doesn't end there, right? Finally, we're able to also work on the post-dispersal cycle for the first time and help you monitor these loans and act on them proactively for a change rather than reactively. So I've spoken a lot about what we do. Why don't you hear it from Snapmint's customers themselves?
My name is Pavan Kumar. I'm a photographer from Uttar Pradesh. Snapmint के बारे में मुझे मेरे भाई ने बताया था। Snapmint उन लोगों के लिए बहुत अच्छा काम करता है जिनके पास क्रेडिट कार्ड नहीं है। सिर्फ अपना पैन कार्ड डालो और मोबाइल नंबर डालो, किसी भी प्रकार की कोई क्रेडिट कार्ड की जरूरत नहीं होती। Snapmint पर मेरा एक्सपीरियंस काफ़ी अच्छा रहा। मैंने खूब सारी चीज़ें खरीदी हैं किस्तों पर, कोई भी एक्स्ट्रा चार्ज नहीं होता, कोई हिडन चार्ज नहीं होता। मैं काफ़ी परेशान था, मेरे पास कोई भी क्रेडिट कार्ड नहीं था, और Snapmint जब से यूज़ करने लगा हूँ मैं खूब सारे हाईएस्ट वैल्यू वाले प्रोडक्ट भी खरीद सकता हूँ। आप इसमें लिमिट बढ़ती जाती है जैसे जैसे आप यूज़ करते जाते हो। थैंक यू Snapmint, थैंक यू सो मच।
Just one more.
स्नैपमिंट के साथ मेरा एक्सपीरियंस बहुत शानदार रहा है। किसी भी तरीके से हो, वो प्रोडक्ट को खरीदने से हो, प्रोडक्ट के बारे में पूरी जानकारी हो, आपको अपडेट चाहिए हो प्रोडक्ट का, वो सभी कुछ आपको टाइम टू टाइम मिलता रहता है। इसके बारे में मुझे मेरे एक फ्रेंड है, उन्होंने बताया था कि भाई अगर आप एक लो डाउन पेमेंट देकर और एक अपने अकॉर्डिंग कि आप 6 महीने की या 12 महीने की या 3 महीने की बनाना चाहते हैं, तो आप अपनी उन चीज़ों को, सभी चीज़ों को पूरा कर सकते हैं। जैसे ही आपकी सारी चीज़ें ओके होती हैं, आपका पैन कार्ड वगैरह जो भी डॉक्यूमेंट्स आपके लगते हैं, वो जब सारी चीज़ें ओके होती हैं तो आपको लिमिट एकदम शो हो जाती है। काफ़ी चीज़ें मैंने खरीदी हैं और ये एक बहुत आसान तरीका रहा चीज़ों को पूरा करने का, जिससे उसको उन चीज़ों का अभाव हमेशा महसूस होता है, जो चीज़ें वो चाहता तो है लेकिन चाह कर भी खरीद नहीं पाता। तो थैंक यू Snapmint.
Well, folks, I hope you're convinced about the future of lending, because we are. Yep. Do we have time for some questions?
Thank you so much for this very, very interesting session. We have time just for one question, and I can see a hand raised here.
If I could also just address one more thing. I know we talk a lot about challenges in the ecosystem. We do have Pete from our team who heads our growth at the back of the room. We have written a little white paper on some of these challenges and how, as a community, right, SamvAAd, all FIUs, AATSPs, as well as AAs, are working towards these challenges. If you would like a copy of that white paper, Pete is right in the back, and he can give you this copy.
Thank you. Please go ahead with your question.
So I want to ask you that there's a second consent required for loan monitoring access. Have you seen what the drop-off rate is between asking for one consent and the second consent?
That's a great question. So to start with, of course, yes, if you simply put a second consent one over the other and share it to a customer, it's possible that you would see reduced drop-off rates because you're asking for a lot of information, right? But again, I'd like to point to a lot of the talks over here. When you're able to provide the benefit and clearly show the value of why you require the data and what you can provide to the customer, they tend to then be, you tend to again see an uptick in that consent conversion rate. So if you were to explain that consent, like you're doing a loan monitoring consent specifically so that in the off chance that they are unable to pay this loan or they have some drop in their cash flows, right, or some exigencies, that we can restructure it for you, that we can offer you a different plan, right? That is what the benefit and that they will see and then understand why this is being asked for.
But have you seen any difference in the consent rates between 1 and 2?
Sure. If you add maybe an additional consent, yes, it will drop, but if you add the additional information of why you're taking that additional consent, it moves back to nearly the same.
Thank you so much, Gavin and Athreya.
Thank you, everyone.